Well, good morning, everyone. How quickly things change in the markets. 2 weeks ago, it looked as if the dollar was headed to disaster. Now, the U.S. currency is back to the level of early September, around the time when the Fed decided to put off tapering its monthly bond purchases. In fact, the dollar has rallied 2.3% against the euro over the last week, which is amazing, considering the total range for 2013 up until the end of September was 7.6%. That change, the rally in the dollar, reflects several points. One, the return of tapering. When the FOMC decided in September not to go ahead with tapering off their monthly bond purchases, they generally agreed that tapering would begin by the December meeting. After the government shutdown and debt ceiling debacle, the market pushed off the start of tapering until March. However, the possibility of an earlier start is coming back. Two, problems on the euro side. The sharp drop in inflation and rise in unemployment in the Eurozone has put pressure on the ECB to do something, and increased speculation that something could come as early as this week's ECB meeting. Personally, I think such an action would mean that they were giving up on their recovery scenario, which I can't see happening yet. I don't expect the ECB to take any new action until perhaps the December meeting, when it'll publish its new economic forecast. Third is more confidence about the U.S. Friday's PMIs showed generally expanding growth around the world, with one thing clear: the U.S. is still leading the pack. The U.S. ISM of 56.4 was the highest of all the purchasing managers' indices. The ISM has risen for an unusually long 5 months in a row, which is a significant sign of resilience in the U.S. economy. So the strong U.S., weak rest of the world thesis that had been driving the dollar before the September FOMC meeting and the government shutdown is coming back. For today, the rest of the Eurozone manufacturing PMIs are the major feature. Italy's PMI is expected to rise slightly to 51.0 from 50.8. The market expects no change in the final releases for France, Germany, and the Eurozone as a whole compared to their preliminary estimates. But actually, I'm not sure anyone really does forecast the final figures. Later in the day, the U.S. factory orders for August and September will both be released at the same time because the government shutdown delayed the release of the August figures. The September orders are estimated to have advanced by 1.8%, but given the confusion over them, the market may just choose to ignore this data. Perhaps the most important market drivers today will be speeches. Speeches by the ECB's Constantino and Amundsen, who may give some hint about this week's ECB meeting, and speeches by the Fed's Fisher and Powell, who will speak on monetary policy, and Rosengren, who speaks on the U.S. economy. For more information, including technical analysis, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX, wishing you solid trading.